Are we having a hard time finding silver? Because I thought that you'd be the last person I would ever hear that from.
How much more can they do this? How much more fuel do they have to be able to bail themselves out? I would say not much, but
Everyone wants a slice of the silver pie, but there's just simply not enough pie to go around.
it's a game that could very well, just like most manipulations, end badly.
Who can pretend knowing exactly how much an ounce of silver is worth after decades of manipulation and
Right.
turning real investors' demand from the physical market to the paper one and years of exponential monetary printing by all the planet's central banks?
59 nations plan on joining the BRICS, an asset that is wickedly needed, expanding in utility and uses and decreasing in its footprint in nature. How high can it go? Higher than anyone thinks possible is what I would say. You just can't make this up, man. And
Why have the premiums on Eagles gone so high in the past couple months?
silver is, in my mind, the most undervalued, underappreciated asset on the planet in the trade of a generation. And there's only roughly 60 million ounces in registered on Comex. There's not enough silver to go around, and he who has the commodities makes the rules. Everyone wanted to be part of it and own our treasuries and own our securities and own our real estate. And well, the times are changing, and the little boy who cried wolf keeps saying this is going to happen, and it never does until the wolf comes.
You have just tuned into the Silver Stacking podcast featuring yours truly and the man, the myth, the legendary Andy Shectman, the most respected voice in the world of precious metals. Grab some popcorn because today is going to be a good episode. We'll be covering several topics from silver stacking to geopolitics and everything in between. If you want daily silver news, then look no further. Make sure you subscribe and click the bell. And if you wanted a cheap, safe, reliable place to purchase precious metals, Miles Franklin's the best. We have this week's special, kilo bars $1.79 over spot. We have Buffalo rounds $2.35 over spot, 90% $2.50 over spot. Email me, slayer@milesfranklin.com, or call me 330-485-6172. Andy, it's good to see you back so soon. We just had an episode like 5 days ago. How you doing?
I'm good, brother. Good to be back. There's a lot to talk about, man. Never enough time.
Yeah, I picked a couple of very important things I think we should talk about. First, though, I just want to be upfront. I gotta know. I saw there was a note the other day. Are we having a hard time finding silver? Because I thought that you'd be the last person I would ever hear that from. So what's going on with that?
Yeah, the coins are getting tough to get all of a sudden. I've this is how it always happens. And all of a sudden, all of the backdated coins that were selling at such a good price are becoming next to impossible to get. And that's for all the major mints. My operations told me that the majority of everything that we've been getting in terms of backdated coins have been coming from European distributors who are having hard time selling things as well. And but that's changing very rapidly. And all of a sudden, it goes from flush to not flush. Premiums are slowly starting to rise. So yes, it is true. And I knew this would happen. It always happens, even when the environment is not as tenuous and freaky as it is now. But yeah, we'll see if it remains. But I would say this is the beginning stages of higher premiums and difficulty, greater difficulty getting product as we head into the second half of the year here with the big BRICS meeting in October and the election in November. I don't suspect it will get much easier as well. I think people will start to wake up to the need to perhaps think outside the box as things start to get a little bit crazier.
When we talk about missing the boat, I don't necessarily mean paying $50 for an ounce of silver, hurry up and buy it before it's $50 or $100. Sometimes I mean while we still have it available. I talk to people all day long. Local coin shops, all bought out. Most online places, 90% of their stuff is out of stock. We still have the stuff available, but if we are having trouble sourcing it, that speaks for itself, and you probably should jump on the ball in terms of at least getting something while it's still available, because who knows how long it's going to be until it's all gone, or most of the stuff that you like buying is all gone and now you're left to some other type. And I don't like telling people, hurry up and buy it right now, more so that it's still available to some extent.
100%. Yep, I agree. I agree.
Yeah.
And, the inventory in this industry, which is in many cases just in time, meaning We're placing orders with distributors all around the world, and oftentimes we'll sell that product even before it comes in, knowing that we have it's cleared customs on the East Coast and we know it's on its way. We'll sell it. Um, and when you sell out of that stuff, you have to reorder again. And oftentimes, um, you're not going to see product for could be a much longer period of time if all of a sudden there's a gap between supply and demand. And this is what has happened. And it's happened over and over and over and over again throughout my career. But there's never been any time in my 34-year career where the world is um, as crazy as it is right now.
So speaking of shortages, I wanted to show you this. We fell below 700 tons in the vault. I'm curious about your thoughts on this. I mean, this is insane. And this came out yesterday. This information came out yesterday. I know there was a couple of other articles. I like this one because it actually shows, the Shanghai exchange and their reportings as well. But yeah, what do you think about this? I mean, it's
Well, I've
it's
talked a lot about it, even on your show, how it appears as though that the Western banks, and if you go to the Shanghai Gold Exchange website, you'll see that starting the second week in March, you had four banks go each week. One each week, one after the other after the other. It was like Deutsche Bank, Standard Chartered, J.P. Morgan, and HSBC. And these are the big shorts. And when you take a look at the amount of silver that is bleeding off of the Comex, that is bleeding off the LBMA, the amount of contracts that are written that are rehypothecated are many, 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 many times over. And it's as if you have to keep in mind that gold cannot be exported out of China, but silver can be. And it's interesting to me that these four bullion banks, which are listed on their website, show up 4 weeks in a row, starting the second week of March. And from that day, if you look at the website or if you look at their inventories of silver, they start bleeding down the second week in March to where they are now, these low levels. It's as if they went there and said, listen, we need your help. And I'm sure there was quid pro quo involved. It's not out of benevolence that the Chinese would give up the silver, especially when they're charging or offering that high of a premium against the Western price. But it's almost as if, and again, this is trying to put the dots together, but it's as if they went there and said, we need your help. We're in big trouble. We have deliveries. We don't have enough silver. We don't want to blow up the system. Give us some of your silver and we'll do X. Who knows what X is? But it's to me interesting when you realize, A, that leading up to that, the commercial banks had massive short positions on silver, some of the biggest I've ever seen. B, that they show up at the Shanghai Exchange where the only thing you can export is silver, and see right at the same time we see all of this drawdown off of the Shanghai Exchange. You have 4 weeks in a row these big short bullion banks show up there. What was discussed, who knows? But I will tell you that it was pretty obvious that we were going to see some sort of a pullback, I guess. Either that or the commercial banks would have been run over because their short positions kept growing and growing and growing leading into this last pullback. Now, what that means to me is that they had enough silver to deliver those people who were standing for delivery, but it's as if obviously when they were record short and then there's a drawdown, what is happening is that the commercial banks are taking the other side of the trades that the bullion banks, or that the hedge funds rather, are putting on, which would mean the hedge funds are going short and selling longs to the commercial banks who are covering shorts and taking those long trades the other side. And that's why one of these days the commercial banks will have hoodwinked the managed money into going short. They have taken the other side and go long, and they let it run, because to continue to try and naked short this market is insanity. There is not enough physical silver to deliver. And what differentiates this market over markets in the past is the amount of deliveries, where these markets never really were designed to deliver product, that they have to allow it to maintain the illusion of legitimacy. But these countries that are standing for delivery, like India, who bought more silver in the first 4 months of the year than they did of all of last year. Well, they're standing for delivery. India bought more gold, 1.5 times the amount of gold that they bought all of last year in the first 4 months, and then repatriated 100 metric tons from the Bank of England. The concept of counterparty risk is becoming pervasive, and I think these countries who were never sophisticated, wealthy, or coordinated enough to drain the exchanges now are. And they realize that's how they win this battle against the West, is not to fight them with sticks and stones, but to damage really the bullion banks, which are the commercial banks, the ones that have these too big to fail massive balance sheets, by standing for delivery in a massively overly rehypothecated environment where in the game when the game was originally started and most of my career 1% or less of these contracts stood for delivery, and now you're seeing large delivery requests bleeding down the exchanges. And I pay close attention to the Shanghai exchange, because if it keeps bleeding down, where are they going to get the supply to stand for delivery next time? Because we're already at the second lowest level of silver in the 140-year history of the LBMA, and there's only roughly 60 million ounces in registered on Comex. There's not enough silver to go around. And by the admission of the LBMA that they're trading upwards ends of 2.9 billion ounces of silver per day, which is 3.5 times global mine supply per day, it's a silly, silly game in an environment where countries are requesting deliveries. So yeah, this is more and more compelling argument that we're getting close to seeing the end of the ability of these banks to naked short. You can only suppress a market or manipulate one over an extended period of time by pushing in the direction that it is going. And when you have all of these countries intent on accumulating commodities, a la Zoltan Pozar, and Bretton Woods 3, a system about he who has the commodities makes the rules. I think that is also true with silver. And when you look at silver being really the most largest concentrated short position by a handful of banks of any commodity traded, it just coils the spring that much more and gives the potential that this could blow up in a very bad way and bring down some of these very large, too big to fail banks. And what does that do to the whole system? That's why when guys like Bix Weirs used to say that silver is the Achilles heel of the whole system, I never quite understood it, but I do now. And if there wasn't silver to go around and you get all of these redemption requests for delivery in an environment that is massively rehypothecated, naked, it's a recipe for disaster. So that's what I think the Shanghai bleed down is. It was their way of begging, if you will, the Chinese to help them out of a sticky situation. But how much more can they do this? How much more fuel do they have to be able to bail themselves out? I would say not much, but here again, they've been able to keep the ball up in the air for a long period of time. But it just so happens that when the ball was up in the air, the United States was, revered, and everyone wanted to be part of it and own our treasuries and own our securities and own our real estate. And well, the times are a changing, and in that environment, being naked short in these commodities, which are essential, strategic, critical, not just industrial. The game is about all men for every man for himself. And so all of these alliances and business relationships go out the window, and you'll start to see these banks start to eat themselves. And it's a game that could very well, just like most manipulations, end badly.
Everyone wants a slice of the silver pie, but there's just simply not enough pie to go around. And I like that
Well,
saying.
especially if you sell 5,000 pies, and there's only, 500 pies backing those
Yep,
promises. Well, if everyone wants a piece, good luck.
yep. And that's exactly how they're able to suppress the prices. But and here's the best point. Everyone says that silver can't break above 50 again. They're looking at this from a historical perspective, but we are not in the same situations, not even remotely close of the situations that pushed silver to $50 before, like the Hunt brothers and them doing the same exact thing that's happening now, but on a much grander scale. So for anyone thinking that silver can't break above 50 or only pushing towards that or may never reach $100, they're thinking of this from a historical perspective, which we've never seen this type of situation before. And there is a great article that came out today, actually, This came out today, June 13th. Silver price forecast $47 to $50 silver by the third quarter of 2024. Gold to silver ratio breakdown alert. It says a once per 4 year signal says silver is about to rapidly surge higher within the coming months and should achieve a price target of $47, $50 per ounce by the end of third quarter 2024. Get ready. Now, I'm not vouching to say this will for sure happen, but the information given is still just as relevant, even if it doesn't. Mentioning while the Federal Reserve meets today and the prices could be volatile following the interest rate decision, our pending surge signal is ready in the books as of mid-May. Then mentioning that wise investors should be finalizing their silver-related portfolios now, as the next wave of the advance should begin any week now. Going down as the history of this signal. This is pretty interesting, noting this 4 year signal. But yeah, there's a lot that breaks down in this. You guys can check it out. I'll probably cover an entire video talking about this, but they go down mentioning that mid-May, when silver was trading $28.42 an ounce, if we take the average of the previous 5 signals, 69% advance, and add this to the $28.42 price, we yield an estimated target of $47.92 per ounce. So this isn't just a made-up number, it's looking at actual data and information. So yeah, I thought that was pretty interesting.
Yeah,
So
most of what the pickaxe does is well researched. Technical analysis in a rigged market. Sometimes, I don't put a tremendous amount of stock in, but that looked relatively compelling. I think in a world of probabilities, we could expect to see those prices. To put it out there by the third quarter, yeah, it should have been done last year. It should have been 5 years ago. It's who knows? And I think that you can take that, and the wise person takes in as much information as possible from all different forms and sources, and then tries to make their own conclusion. But the one thing I do like about the pickaxe is a lot of what they talk about is has some form of research and fact backing it, or in this case, technical analysis based upon previous market signals. And hey, it wouldn't surprise me. I think it's hard to give a timeline, but here again, he's saying the average of the last 4 times we've seen this signal, here's where it is. So it's compelling. But look, the bottom line is silver is undervalued, and it's undervalued in many ways. But you could argue that this pullback, at least from the perspective of above, was done so because the commercial banks were wickedly short, and I think beginning to get nervous. So does that mean, that this is the end of the cartel? Maybe. There are guys that I follow on X, very good chartists and technical analysts that seem to think that the cartel is done with it. They don't have the ability to maneuver the markets the way that they used to. One of these days that will be the case, which is the whole premise of the little boy who cried wolf. And the little boy who cried wolf keeps saying this is going to happen, and it never does until the wolf comes. And that's why being prepared is very important. And look at every single one of these counterintuitive price actions where, damn it, didn't happen, but we thought it would, as another gift to get, to continue to buy before the price becomes stupid or the availability is gone. Now, I believe that will be the case in a world of probabilities. I don't know when, but I think it's highly probable there will come a point where silver goes higher than people think possible. I don't know when that is, but based upon the supply-demand imbalance, the lack of silver that's found in the ground, the continual structural deficits, the lack of inclusion in the military-industrial complex's role in the Silver Institute numbers. I mean, I can keep going on and on and on. The fact that it's coming out of the ground at 7-1, it's been 16-1 for 5,000 years, yet it's priced at 80-1 or nearby. There's a million reasons why silver is, in my mind, the most undervalued, underappreciated asset on the planet and the trade of a generation. And I don't say that lightly. What happens is people get very disenchanted with the counterintuitive action, the lack of performance in a world where it should be performing. But then ask yourself, why would you have a handful of commercial banks naked short to the degree that they are the most concentrated short position in any commodity ever traded on Comex? There's a reason they're holding it back. But when the rest of the world says, good, you hold it back on price and we'll stand for delivery and we'll jack up the price in Shanghai if you're able to get it to us here, good, go for it. We'll pay you $4 premium. These things are compelling and, overlooked. And I think what is real is that the flight of metal from west to east is real. And the lack of understanding or the just blowing it off as being not important baffles me. I think it's real, and I think the consequences of it ultimately will be profound, shall we say, in a world where silver is needed for so many things. And I think it is a critical metal. It's not an industrial metal. And I think a large portion of the players that are holding down the price understand um, its strategic properties and realize we're late in the game and they better hold down the price so they can stockpile the hell out of it before it goes higher. To me, that's what's happening. And I guess we'll have to see if I'm right, but that's what the smoking gun or the crumbs that I see seem to be pointing in that direction.
This, what I'm about to break down, is a perfect example to understand the reality of silver. And now they talk about $5,000 silver. Don't look at that number as literal. Just listen to what this says, because it perfectly ties into corruption and how the price is manipulated. If the price of silver were based directly on the real physical silver market, silver's price should be at $5,000 an ounce. I'm not saying the price of silver will reach $5,000 an ounce. I'm just saying that the actual physical silver spot price is not only extremely undervalued, but that it is an illusion compared to the real value of an ounce of physical silver, since it is totally disconnected from reality. Let me explain further. $5,000 silver may seem totally crazy, but who can pretend knowing exactly how much an ounce of silver is worth after decades of manipulation and turning real investors' demand from the physical market to the paper one and years of exponential monetary printing by all the planet's central banks? And they say $5,000 because of a math equation. It's the 250 to 1 ratio. According to an article by Bloomberg, which has always been a reliable source with their published data, the size of the global annual silver market is equal to $5 trillion. According to a recent interview with David Morgan, the annual physical silver production is roughly 1 billion ounces. With silver trading around $20, and this article was written back then, this represents a $20 billion market for physical silver, so the size of the physical silver market is 20 billion. They go into this ratio. The difference between 5 trillion and 20 billion is the 5 trillion number represents the entirety of the paper silver market, including all paper financial products, certificates, options, ETFs, etc., derived from the real physical market. That allows investors to be exposed to silver. Now, they go into the 250 to 1 ratio. Today, the actual size of the silver market, according to Bloomberg's 5 trillion divided by 20 billion, which is the physical market's 250. 250 times $20, which is silver spot price, is $5,000 an ounce. See, that's the facade that the Comex is pushing, is that there's all of this paper silver is backed by physical, but it is not. And I thought that
Well, I
is a
think those
very
numbers are
compelling.
off a bit, and I love David.
Yeah,
David's my friend, but I think it's not right to only count what is being mined yearly. You
yeah,
have to add it to some other stockpile, even though there is a deficit. But it's close.
yeah.
And I would even say they probably mined even a little less than a billion ounces, maybe 850 million or so. The rest leading up to a billion, some of it was recycling. But I don't know if it's right to only take the yearly mine supply against the whole number or something bigger. And even if it is bigger, what is
Right,
there, 3 or 4 billion ounces of silver on the planet, of which most of it is encumbered. So even if you say 5,000 and divide by 3 or 4, you're still north of what? Even divide it by 4, you're 12, $1,500 an ounce. So the numbers are much higher than they should be. Let's just agree to that. And when you look at the London Metals Exchange, they publish that they trade 292 million ounces on average of silver per day, but admit those numbers are 10 times, as much as 10 times underreported because of the way they do it. If I sell you 10 contracts and I buy 20, the net result is I have 10. I sold 10, bought 20. That's a net result of 10, but it should be 30 contracts that were traded. No, they're only going to show the net out. So the numbers are much higher, which would put it at 2.9 billion ounces traded per day. Well, there's only 300 million ounces on the London Metal Exchange of the 800 million that are available to be traded. The other 500 million belong to the ETF. So 300 million ounces on the LBMA, and yet they admit to trading 292 million a day, let alone they're saying it's 10 times underestimated. So even if you're 2 billion ounces instead of 2.9, you're trading, what, 7 times the amount of silver that's in the vault every single day. It doesn't work that way. That's rehypothecation. That's selling the same silver over and over and over and over and over again. And if someone says, that's great, I'll stand for delivery on X amount, well, what does that do to the whole equation? So any way you look at it, those numbers, the numbers that we see now, are wickedly undervalued. And I just don't know. I'd like to talk with David about that and ask him
This was
why,
written years ago.
but
This
why
article
they
was
would only
published.
choose the yearly mine supply versus,
Yeah,
the entire above ground supply, even that which isn't available to be traded, the numbers would still be much higher. But anyway, you look at it, yeah, I guess the moral of that argument is that silver is wickedly undervalued by every metric.
yeah.
And and it's only increasing in its demand, that's for sure.
Yeah, the one part I really like about that is how they mention who can pretend knowing exactly how an ounce of physical silver is worth after decades of manipulation and turning real investors' demand from physical to paper, right?
You know what else I
That
would say to that, though, brother? I would say, who the hell knows what any asset is worth right now in an environment where, we've seen, look, since COVID, we've seen 6 trillion in freshly printed, papered over money, and 8 trillion in deficit spending. But you go back before that, even with interest rates at zero for 15 years, you throw interest rates at zero and throw money at the economy, asset prices are wickedly distorted. House prices are distorted, although coming a little bit back into line with the raise in rates, raising the mortgage rates. But everything, all asset prices, stocks and even bonds, everything has been distorted in asset prices. The real distortion has been suppression of interest rates, where since 1982 up until 2023, rates went straight down at a 45-degree angle, making everything in stocks and bonds and real estate worth more money in an environment where illusionary interest rates or interest rate suppression and easy money created all these distortions in asset prices. And the funny thing about it is that the one price that they didn't let distort to the upside, they distorted to the downside in an era of all of this money and suppress interest rates, were precious metals. So it's like a coiled spring that when the suppression ends, it'll slingshot because you have all of these contracts that are written against it holding down the price and creating a distortion in its real price just to the other direction. Because what gold and silver are, they want us to believe that they're just commodities, but what they really represent is kryptonite, or the antithesis to the system. And rising gold and silver are the canary in the mine shaft, and speaking to the problems of a system, the frailty of a currency, the inflation of a currency, all of these things, gold and silver are kind of barometers against it. So, not to mention, silver has become strategic in a world where it seems warfare is everywhere. So, with the amount of silver needed in all of this high tech weaponry, and it's omitted conveniently from the Silver Institute's numbers, I mean, they should be way higher. To me, that's the reason why you have these banks suppressing the price. Why Bart Chilton was told to back down instead of prosecuting J.P. Morgan when he went into his superiors and said they're in violation of our agreement and antitrust law. And he admitted on Chris Marcus's channel, back down, Bart. It's a political decision. Of course, I speak of Bart Chilton, the former CFTC commissioner who died a week or two after that interview on Chris's channel. So when you talk about where it should be a hell of a lot higher. And you're right, no one knows. And that's what happens when you create distortions in price discovery through manipulations in interest rates and throwing more money at the economy in a short period of time than we've ever seen. And this reckless policy, fiscal and monetary policy, I mean, it ultimately threatens, the whole free market system, because it's distorted things so badly that when interest rates and asset prices find equilibrium in a real environment that isn't being suppressed, God only knows where how high the price of gold and silver can go, but conversely, how low traditional assets that are measured against inversely to a rise in interest rates. So the whole thing is price discovery is a very challenging thing in a make believe bizarro world that we have been living in for a long time. And this is where trusting your gut and trying to feel it out, where does it end up? I think, is appropriate. No one really knows. Trust your gut. An asset that is wickedly needed, expanding in utility and uses and decreasing in its footprint in nature. How high can it go? Higher than anyone thinks possible is what I would say.
I like that. So what's up with what's going on around the world? Is there any updates with BRICS or any other things you want to talk about news-wise?
Yeah, a couple things from the stupid, stupid, stupid category. The U.S. House of Representatives has just approved the confiscation of frozen Russian assets and their transfer to the Ukraine. And obviously, this signals to China and Saudi Arabia and all the other countries in the Southern Hemisphere that hold our U.S. treasuries that, hey, we'll freeze you, we'll seize you at any point. What ultimately happens to the bond market? Who would be stupid enough to hold any long-term duration treasuries from a government that has chosen inflation over austerity and will confiscate your assets and use them to fund the country you're in a war against? I mean, this is as stupid as can be. Today, Biden and Zelensky signed an agreement that the United States and the Ukraine, a bilateral security agreement for 10 years. So we're committing support to the Ukraine as for the next 10 years. I mean, it's just, you just can't make this shit up, man. And as a result of that, what else should we expect when the Crown Prince Mohammed bin Salman from Saudi Arabia has turned down an invitation to the G7 summit in Italy this week? Starts on Friday, and what should we expect? The G7 leaders have agreed to lend the Ukraine $50 billion using the Russian frozen assets, and funds will be used for military budget, humanitarian, and reconstruction support. The income comes from interest stream on the immobilized assets, the EU official said. The principal is untouched for now, but we have full opportunity to seize the principal later if the political will is there. You can't make this up. It's one thing to sanction, it's a whole nother thing to confiscate. That's a big, big, big deal. There was if you remember, we talked about there were 200 meetings from the beginning of the year to October of this year when the big BRICS meeting happens. And there was just a big one in Nizhny, Nizhny, Novograd. And there was an article that listed 54 points, takeaways from the meeting. I'll read three of them. One, there were 21,000 people who attended from 139 nations. 78 billion in bilateral deals were signed on the sidelines. That means deals where I'll pay you my local currency, you pay me your local currency. We won't use the dollar. 59 nations plan on joining the BRICS. 59. And this is a big deal. A couple other things. The Iranian foreign minister came out and said, what can be viewed as the most important goal for BRICS is the reform of the Bretton Woods system, which has always been an obstacle to the progress of independent and developing countries. The U.S. uses the dollar as a weapon, so BRICS is on a mission to change or completely dismantle the Bretton Woods system, as it is based on the dependence of countries on the U.S. currency. The United States, which has weaponized the dependence of countries on the dollar, which, along with illegal sanctions, banking restrictions, inequality in the decision-making process in international financial institutions, and lack of consensus in these organizations, has proven that these highly unjust systems must be reformed and dismantled. I find it interesting that JP Morgan's executive director of strategic research, Amy Ho, and the global head of research, Joyce Chang, just sent out a note to their clients saying that the Biden's administration's latest tariff announcement on 18 billion of Chinese imports has elevated the debate on whether China's dominance in the critical mineral supply chain will emerge as the latest battleground for U.S.-China strategic competition. She wrote, in 2022, China produced 68% of the world's rare earth minerals. Not real thought out well for North America if we want to go green, when China produces 68% of the rare earth minerals, which are used for things like magnets and batteries. 70% of the world's graphite, which is used in lubricants, electric motors, and even nuclear reactors. However, China's real dominance lies in the mineral processing capabilities. According to JP Morgan, China processed 100% of the world's graphite supply in 2022 and 90% of the rare earths and 74% of cobalt and other critical mineral for batteries. Increasing dependence on critical minerals, which are key inputs to semiconductors, electric vehicles, and military weapons, has raised concern that China could use its dominance in this supply chain to retaliate against U.S. industrial policy. Well, we just sanctioned a whole bunch of companies in China as a result. This is the kind of thing that they can use against us. And lastly, a new thing that just came out said that gold share of global international reserves just jumped to 18% in 2023. That's the most in 27 years. And it's now also the second largest asset held in global central bank reserves, exceeding the euro for the first time ever. The US dollar is at 48%, but down from 60% in 2017. And at the same time, the central banks in Q1 2024 bought more gold than it ever before. So when you talk about this stuff, they're selling treasuries, they're buying gold, and they're being incentivized to do so. And it's one of these deals where now the official world gold reserves are higher than just before Nixon closed the gold window. I mean, it's almost as if they are thinking we are heading towards a gold standard, which would make sense. And to give you an idea of how fast things can change, right? The Bank of Japan, and this is the last thing I have to talk about, I think. There might be a few other things to talk about. Actually, there is. I got a few more minutes. So, a couple things. I got a few more to talk about. So, the Bank of Japan spent between April 29th and May 1st. In just a few days, the Bank of Japan spent 68 billion to give the illusion that the yen was not collapsing. And this is one of the reasons they keep the price of gold down, because they don't want, them to rush to the fact that the yen or any of these Western G7 currencies are in trouble. But in the last 6 months, an ounce of gold in Japan, because of all this money printing, has gone from 290,000 yen in December of 2023 to 361,000 yen in June of 2024. 71,000 yen more to buy 1 ounce of gold. And this is what happens when you start printing money to buy the debt. That's monetization. And on a price increase, you're talking 30% gain in a very short period of time. This is how fast things can move in a depreciating currency environment. Let's see, anything else? One of the things that I find completely stupid is that the Western media is claiming that the PBOC has stopped buying gold, and this is why gold has fallen. It's just ridiculous. First of all these forever people have been saying you can't believe the numbers that China puts out. The analyst from the Bank of Montreal just said that a few weeks ago. Can't believe the numbers. They're way understated. The IMF has said they're way understated. Alistair McLeod, one of the smartest men in the world, says they have 38,000 metric tons, yet they tell us they only have about 24 or 2,500 metric tons. Who's telling the truth? Who isn't? So when you talk about premature conclusions, how can anyone say just because of one report saying unchanged monthly holdings that China is not buying gold anymore because it's too expensive? It's total bullshit. And I would say that they're not going to tell us how much they're buying. And even if the numbers that we have been seeing for 19 straight months, if they have been buying, they've probably been buying a whole hell of a lot more than they tell us through sovereign wealth funds and less transparent, much more opaque ways of bringing gold into the country. At the same time, they're the largest producers in the world, and they've been producing gold at uneconomic levels using our trade imbalance forever. So for people to say 1 month's unchanged numbers, they're done buying gold, this is why the price fell, is as stupid as anything I've ever seen in the Western media and their stupid rhetoric trying to throw people off the scent. Look, you have 4 or 5 companies that control all the media. It's a bunch of bullshit. Don't believe it. Let me just see if there's a few. One other thing that's really worth talking about, and I don't think I talked with you about this, but I may have, was Project Enbridge. Project Enbridge I've talked about for 2 years, it may be about that long. It was a cross-border payment system that was designed by China, Hong Kong, Thailand, United Arab Emirates. And I find it interesting that the first 2 test trades they did in 2023, the first one was a cross-border payment transaction using the digital yuan for oil. I think it was with the UAE, and the second one was for gold, both with digital yuan on the Project M Bridge, which is a cross border payment system that sidesteps SWIFT. Well, as of June 5th, Saudi Arabia has now joined a China dominated central bank digital currency cross border trial in what could be another step towards less of the world's oil trade being done in dollars. The move announced by the Bank of International Settlements on Wednesday will see Saudi Arabia's central bank become a full participant of Project M Bridge, a collaboration launched in 2021 between the central banks of China, Hong Kong, Thailand, and the UAE. So when you talk about, ways that they can transact with one another in their local currencies using central bank digital currencies outside the SWIFT, this is how they do it. And remember, anything that is paid in yuan is immediately convertible into gold on the Shanghai Gold Exchange. One last thing, you have Putin giving a speech June 7th. He says the Bretton Woods monetary system is dead and gone, and the current one is based on the confidence in the U.S. economy, Putin said at the plenary session of the St. Petersburg International Economic Forum. There is no guarantee. So to say other than confidence in the U.S. economy and the current global financial system, that's what it's based upon. In other words, they're talking about the unpegging of gold based upon Bretton Woods. And now the only thing backing it is the confidence of the West. I think it's interesting that he says these things as they've been accumulating gold, and gold's tier one. They're hedging towards you need to have something backing the new system. That's what the new BRICS currency will be. He says, due to the introduction of restrictive measures by the United States against the Moscow Exchange Group, exchange trading and settlements of deliverable instruments in US dollars and euros are now suspended. The move means banks, companies, investors will no longer be able to trade either currency via a central exchange, which offers advantages in terms of liquidity, clearing, and oversight. They're making it impossible to even trade dollars and euros in Russia, and they are pegging their currency to the yuan and conversely then to the dollar. You're looking at a situation where everything is changing. They're breaking away from what used to be. And I just think that this is starting to spin out of control. But it won't happen. And that's why I like little by little by little by little, and then all at once until they have enough delegates to trade amongst. And I think the way they want to do it before they issue the common settlement currency, and even if they did have a common settlement currency, if you only had 10 countries to trade amongst each other with, that doesn't really do it. But now 59 countries officially plan to join the BRICS. If you have 59 countries you can go shopping with your common currency, it starts to work out. You have to have enough of mass to make a new currency system work, to have that mass adoption. And we're getting there. So when you see $78 billion in bilateral deals signed on the sidelines of this last meeting, and 59 countries saying they're going to join, you're getting there, and you're starting to chip away not only at the settlement status of the dollar by all these bilateral deals, but also the reserve status by, instead of these countries buying bonds, they're selling them and replacing it with commodities like gold and silver and rare earths and copper and you name it. And it's a situation where Zoltan Pozsar was right. He called this Bretton Woods 3, a situation now where commodities are worth more than currency. And that's what this is all about. It also inspires a lot of trust.
So I know you gotta go, but I wanted to ask one last question real quick. Why have the premiums on Eagles gone so high in the past couple months?
Why were they so high for the last 3 years? They're the model of inefficiency. Why did the gentleman who Bix Weir interviewed in a three-part interview last year, I forgot his name all of a sudden, but he's the guy that's been there since the beginning, since 1986.
Patrick
Um,
Heller?
no, he's the
Oh.
guy that developed or designed or ran the Silver Eagle program. It's if you go to Bix Weir's website and look at his three-part interview, Jack Sermon, I think is his name. I'm almost positive. And this is the guy that admitted to Bix. I almost fell off my raft when I was listening to it in my pool last summer, where he said, the guy said, look, I was told by my superiors to only make as few as Silver Eagles as possible without creating a real public outcry. That he's like, I used to be on the other side of the table. I used to be an authorized participant, purchaser, the US men. I know what it's like to want to buy Eagles. He said they came to us and asked for like 36 million more in the fall, and we only told them that we would give them 12 million. Or so look, they're supposed to print as many or make as many as is demanded, and they were told by whoever, it's the Treasury Department, it has to be Janet Yellen, whoever, that's who leads the mint, only make just a few, as many as you can without making people go nuts for more silver eagles. And after this interview and the whole summer long, all of 23, people were freaking out. Why is this happening? And then miraculously, they came up with another 4 million silver eagles in August of 2023 and dropped the premiums down. But here again, they're not keeping up with demand. The demand is far greater than the supply, and so premiums are rising, and it's an indication, a leading indication, I think, of where this is ultimately going. And it's interesting when you look at values. The one item that probably has the best value right now of anything we sell would be pre-65 silver, because during the pandemic, when these prices on the Eagles were parabolic, uh, the junk silver pre-65 was the closest thing to silver Eagles in out of control premiums for the whole time. It was higher than anything else. It was the second highest premium behind silver Eagles in any silver product we sold, and at right now it's lower than any of the other ones,
Yep,
and
it
in
just
fact
dropped
hasn't
down.
kept up.
Yeah,
Yeah,
this
so to
week,
me,
this
it is
this
the
week,
best buy that you could make right now, period, would be pre-65 silver, because it was as high as 13, 14, $15 an ounce during the pandemic. And right now it's I don't know.
it just dropped down to 250 over spot for us
Yeah, there you
this
go.
week.
And
That I've never
that's
seen
the
it drop
thing.
down that low. It's been
Right.
$3 over spot the past several months, but this week the price she came out, it went down to 250, and I was like, holy crap! Like that's a really good deal. So yeah,
So that's all I got for you, brother. But I like doing these with you every week, because look at in 5 days the amount of new stuff that's happened. And I
yeah,
think as we get closer and closer and closer to, the fall in particular, there'll be a lot to talk about. There'll be some trigger things that wake the public up. And so for people looking to buy silver, to me, the best thing that you could buy would be pre-65 silver right now. It's distorted. The premiums have not um, the premiums have not adjusted to where they were in relation to where all the other coins are. So if you look at all the major mint coins, the Britannia, the Krugerrand, the Philharmonic, Kangaroo, et cetera, and the Maple, and put it in context with junk silver, they have gone higher than where in relation to where junk silver is. Over the last 3 years, junk silver was higher than all of them. So I would just simply say, if you're looking to buy something that gives you utility and really damn good value, this is what you would have paid most of my career for that stuff. And so that's what I would do. But other than that, dude, if there's something crazy that happens before next week when we talk again, we'll jump on. But in the meantime, I wish you and everyone else out there a great evening and a great rest of the week. And buckle up. It's going to start to get really bumpy and interesting. And as I always say, remember, that's a Chinese curse. May you live in interesting times. No pun intended. These are anything but dull and complacent, that's for sure.
yeah. All right, great talking to you, folks. If you enjoyed this, make sure you subscribe, click the bell, and if you wanted to purchase from us, Slayer at milesfranklin.com, or call me 330-485-6172, and I'll make sure you guys are hooked up. All right, Andy, thanks for having me, and I'll see you soon.
You had me, so I'll say
Well, I
thank you for
guess I
having
mean
you.
for me it feels like it feels the opposite. Just because it's my
Well,
channel, I
I
still
appreciate, buddy. It's all mutual,
yeah,
mutual respect and love and admiration. So
yeah,
you stay well. I got to go jump on another one right now with
yep,
our friends at Liberty and Finance. And
yep.
in the meantime, I hope you have a good rest of the evening. Let's talk soon.
All right, man. Peace.